Which cryptocurrencies are poised for success in 2024? To anticipate the future, let's reflect on the past. Today, we're delving into a report that dissects crypto's performance in 2023 and offers insights into 2024. Brace yourself for a bullish outlook on the horizon. The report we're dissecting comes from K33 Research, formerly known as Arcane Crypto. This digital assets brokerage is renowned for providing top-notch industry insights and analysis. While we'll cover the report's highlights in this video, the full document is a worthwhile read. Let's jump right in. The report kicks off on a positive note, labeling 2023 as the year of a healthy recovery. The primary author, Vler Lund, makes intriguing trend observations. First, he points out that sell pressure remained subdued in 2023, as most individuals needing to sell did so in 2022. During 2023, there was minimal buy and sell pressure, except for a noteworthy group he dubs the fanatics, referring to dollar-cost averaging (DCA) enthusiasts. DCA involves consistently purchasing a fixed amount of an asset at regular intervals, irrespective of its current price. These DCA fanatics tend to accumulate BTC throughout market fluctuations, selling only at all-time highs. Vler also highlights the growing professionalization of the crypto sector, emphasizing that the Wild West days are behind us. Regulation has exerted its influence, bringing crypto more in line with the law, particularly in the United States. While progress varies across jurisdictions, any step forward is noteworthy. Turning to institutional filings for spot Bitcoin ETFs, the report expresses optimism. The costly process of filing for this financial product indicates institutional confidence in the enduring nature of crypto. Notably, BlackRock and other major institutions filing for spot Bitcoin ETFs signal a significant shift and acceptance of crypto's permanence. The report's subsequent pages detail the year's highlights across quarters, providing a fascinating look at the sector's journey. The year commenced with crypto FUD amid a banking crisis in the United States, impacting confidence due to the collapse of Silicon Valley Bank and Signature Bank, both heavily exposed to crypto. Q2 remained challenging with the SEC suing top exchanges like Binance and Coinbase. However, optimism returned in June when BlackRock filed for a spot Bitcoin ETF, triggering similar applications from various financial institutions. Q3 exhibited sideways market movement, but featured a crucial legal win for Grayscale, challenging the SEC's rejection of its Bitcoin ETF application. This win set the stage for increased optimism, leading to a surge in BTC prices. Q4's headline was Binance's $4.3 billion settlement with the SEC, indicating a tough year for the world's largest crypto exchange. It's been a spectacular year for the OG crypto. If you were fortunate or savvy enough to pick up BTC a year ago, you've done well. BTC has surged 163% year-to-date, outperforming other asset classes by multiples. The Nasdaq grew by 44%, the S&P 500 by 18%, while gold had more modest gains at 12%. An interesting observation for 2023 is that BTC has significantly detached from its correlation with equities. This makes BTC a more attractive investment for both retail and institutional investors aiming to diversify portfolios. It was also a year of low volatility for BTC, the least volatile since 2016, and its second least volatile year ever. The authors at K33 are bullish on BTC for the new year, anticipating a peak in January following SEC approval on spot ETFs, a dip, and then a rally throughout the year, reaching new all-time highs by the end of 2024. Moving on to ETH and altcoins, in 2023, ETH performed well against the dollar but poorly against BTC. This was influenced by BTC-specific news and Ethereum's shallow on-chain activity, facing competition from Bitcoin due to oracles. Despite futures-based ETH ETFs getting approval, they didn't significantly impact ETH's price. Okay, let's shift our focus to altcoins. The standout performer of 2023 was undoubtedly Solana. Its speed, scalability, and lower transaction costs have propelled it as a strong competitor to Ethereum, experiencing over 550% year-on-year growth. This surge, however, is partly due to Solana being undervalued after FTX's collapse in 2022, creating bearish sentiment around Sol. Apart from Sol, the only major altcoin to outperform BTC was Chainlink. Now, let's discuss stablecoins. In Q1, Circle, the company behind USDC, faced uncertainty as concerns rose about its $3 billion deposit stuck at Silicon Valley Bank. While USDC briefly lost its peg with the dollar, it managed to recover. However, 2023 wasn't smooth for stablecoins, with outflows from USDC totaling around $20 billion. Tether, USDT, emerged as the big winner, with its supply increasing by $22.5 billion over the year. Tether's impressive revenue model, assuming a yield of around 6% on US Treasuries backing its supply, could result in an astounding $5 billion a year. Now, let's dive into NFTs on Bitcoin, a phenomenon of 2023. With the launch of Ordinals, Bitcoin entered the NFT space. Ordinals, which use inscriptions to store data on the blockchain, even surpassed weekly NFT trading volumes on Ethereum. However, their use has sparked controversy due to increased transaction costs. Supporters argue that Ordinals offer a feasible solution for Bitcoin's long-term survival, especially post-halving. While K33 doesn't delve into NFTs, VanEck expects NFT volumes to approach new all-time highs in the next year. And now, let's turn our attention to a bold prediction for 2024: the emergence of a groundbreaking blockchain game. While predicting the specific breakout game is a challenge, keep your eyes peeled because it could be the game changer that leads to mainstream crypto adoption. A successful gaming project has the potential to be the catalyst we've been waiting for. Moving on to the final section of the report, we're diving into the world of BTC derivatives. They offer a way for investors to speculate on Bitcoin's future price without owning it. The BTC derivatives market includes futures, options, and perpetual swaps. Now, in 2023, the big winner was the Chicago Mercantile Exchange, CME, becoming the largest derivatives exchange for BTC with a staggering 154% increase in market volume. Why? Well, the CME's Bitcoin futures and options products were a hit among institutional investors. Looking ahead, the authors anticipate that the CME might lose its top spot in 2024 after the approval of spot Bitcoin ETFs, leading to increased competition from other exchanges and platforms. Now, to sum it all up, a key takeaway from 2023 is the growing influence of institutions on crypto prices, especially for BTC. While many expect a spot Bitcoin ETF to be a sure thing, few discuss the potential consequences if these applications face rejection. It could shake up the crypto market, prompting a shift of US crypto companies to more welcoming regulatory environments. The second takeaway is the evident impact of regulators, particularly in the US. As we step into 2024, the EU's MiCA regulations are set to come into force, unifying crypto regulation across member states and reducing red tape for companies operating in multiple EU countries. And lastly, while indicators point towards a bullish trend for 2024, it's crucial not to get swept up in the hype. If you're diving into trading, remember the fundamentals, conduct thorough research, manage risk wisely, and follow a strategy that includes regular profit taking. From securing your crypto in a hardware wallet to investing only what you can afford to lose, stay grounded in sound principles. That's it for today. If you found this information valuable, don't forget to like, subscribe, and share. And as always, trade smart and stay informed.